Thank you, Claire. Hello, everyone. Welcome to our webinar. We're talking today about Northern Ireland and from the 1st of January 2021, what you will have to do, what you will need to do to import and export through to Northern Ireland. Now, the first thing to say is you may have already heard talk, if you've been following these webinars, you certainly will, about a staged process for exports to the EU and imports from the EU from the 1st of January. That process is nothing to do with Northern Ireland at all. Nothing whatsoever. This is all about a different set of rules that will apply to Northern Ireland from the 1st of January. It's not the same as the process from the UK to Europe or GB to Europe. So we need to make that very clear from the beginning. These do not meet in any way or share any rules or legislation. They are completely separate. The Northern Ireland process is governed by the Northern Ireland Protocol and by other legislation to do with the Good Friday Agreement and the UK's proposed way forward for Northern Ireland, which it has published. So that is separate legislation and therefore gets us separate rules. And we're going to be talking about those separate rules today. So if you've got systems or you've got processes and procedures, they're going to have a divergence between what happens from UK ports, or sorry, I should say GB ports, and what happens in Northern Ireland ports and airports, because these are going to be two different things, and we need to take and accommodate the different rules. Now, the first one we're going to talk about is Northern Ireland sending freight goods to GB. And I am making a definite change here from saying UK to saying GB, because GB does not include Northern Ireland. Therefore, it's Northern Ireland to GB that we're talking about now. GB is Scotland, England, and Wales. So on these procedures, the government has used the phrase, which is getting out there into general parlance, that access will be unfettered. Their turn of phrase, not mine particularly, but what they mean by that is goods moving from Northern Ireland to GB will not have to do anything different at all to that they do today. So we'll have no import declarations in GB. There'll be no entry summary or security and safety declarations needed. There'll be no tariffs, no duty and taxes to be paid. No customs checks, no regulatory checks, no additional approvals or anything at all different to you would have today if you needed to send cargo from, let's say, Belfast across to Holyhead or somewhere like that. No change whatsoever. So that's quite clear, until you consider that that only applies to what you might call, well, probably the bulk of goods concerned, but standard goods. There are some goods which are subject to special controls. They are not today because we are all one country and all one part of Europe, but they will be from the 1st of January. And these could be goods that need export licenses, that need particular CITES permits for endangered goods, for example. So they're a very small subset of goods that actually move from Northern Ireland to GB. But nonetheless, those ones are subject to some different rules and will need export declarations from Ireland and will need import declarations and other permits into GB. So for the vast majority of goods, nothing is needed. Take your truck, get on the ferry, go. But for some special goods, there will be export declarations and import declarations. We don't have a definitive list of the goods as yet, but I'm sure one will become ours eventually. But at the moment, we certainly know it's licensable and CITES things that are subject to different international treaties, if we can call it that. They will need export and import declarations. So that's, if you like, another subset that we have to consider. We also have to consider the subset of goods that might not actually be considered to be Northern Irish goods, because we have to here caveat this with what do we mean by Northern Irish goods, goods moving from Northern Ireland. Well, we mean goods that you might have said were in free circulation in Northern Ireland, in EU speak. So goods that are either produced there or have paid duties and taxes to get there from some place outside of the EU, perhaps. So those goods that we could have said were in free circulation will get unfettered access to GB unless they are of the special type, CITES and licensable. But there are other goods in Northern Ireland which are not in that situation. They have not yet paid their duties and taxes. They came from somewhere else. They could be goods coming across the land border from, of course, Ireland, the Republic of Ireland. They could be goods that came into Ireland from America and were put into customs warehousing or under inward processing relief or one of those duty suspension programs. Now, those goods are not Northern Irish goods. So therefore, they're going to be subject to normal exports and imports and transit conventions as any other goods in that status would be. So you will need, again, export entries and you will need import entries and all of the safety and security decks and everything else that goes around that, as if they were coming from the rest of the world. So we've got to segregate our Northern Irish goods into those which can have unfettered access and those that can't. And within those that can't, there are two different types. Those because they're licensable in some way, and those because they're not actually Northern Irish goods. They are in transit or from a special procedure. So we must make those differentiations in our systems and in our processes. And it might alter, we might want to alter our supply chain depending on the answer to what we've got to do. So we must take those three different sorts into consideration, which is excellent. But then you get the issue of, well, in Northern Ireland as the dispatcher, the exporter, who's going to make the declaration if there is needed to be one? Who is it who's saying these goods are Northern Irish goods, or they are subject to special procedures, or they are subject to CITES or something like that? Who's saying this, and can we trust them? Because goods will be moving and people will be saying these don't need anything, they're unfettered. Well, can we trust them to say that? Or is this just a quick and easy way of sneaking some goods through without the right paperwork or paying the right duties? Well, there is a bit of a woolly suggestion at the moment. It's not clear in the protocol or exactly what they mean, that Northern Irish companies, those who would be the dispatcher exporter, could get qualifying status. And the implication here is they would be trusted to say the status of the goods that are moving. And we're wondering, and we have asked the question, does this mean getting AEO status? Because then you can be trusted. That's the point of AEO status. You are certified trusted. So we don't really want another sort of certified trusted status if we can avoid it. We've mentioned that to the government. But at the moment, this qualifying status could be given. So we need a little more information, but there is a question there about, is the company you're thinking of as exporter dispatcher going to get qualified status in order to be trusted to make that statement about the goods that are moving? So that is Northern Ireland to GB. We now have to consider going the other way, GB to Northern Ireland. Now, this is a little more complicated because we have to consider the destination of the goods that we're sending to Northern Ireland. Do we intend them to stay in Northern Ireland? Do we intend them to stay in Northern Ireland for a process of some sort and then move elsewhere, back to GB or completely elsewhere? Or do we actually have them in transit so we know that at the time of sending they are actually going to end up, let's say, in the Republic of Ireland or somewhere else, but particularly the Republic of Ireland? We have got to designate our goods or segregate our goods into those subsets in order that we know what is to happen. Now, there will be, for all of them, no export paperwork when the goods move out of GB. But there will be, for all of them, some type of import paperwork into Northern Ireland. So the first thing we've got to say is, well, that's a customs declaration. And yes, it is. There will need to be an import customs declaration into Northern Ireland. So someone's got to organise themselves to do that, either directly or through a freight agent. So having said that, that implies there's going to be import duty and there's going to be import VAT. And here we have to further subset our goods. Because if the goods are staying in Northern Ireland, sort of guaranteed, definitely staying in Northern Ireland, for use in Northern Ireland, you're sending them to a shop in Northern Ireland who's going to put them on the shelves, it's absolutely definite that they're staying in Northern Ireland. And these goods are goods that were in free circulation in GB. See, we have to keep caveating the status of the goods. Then these goods will get in without paying any import duties and taxes. No tariffs will apply to those goods moving into Northern Ireland, because they're staying in Northern Ireland, and Northern Ireland is going to be part of the customs territory of the UK, which is GB and Northern Ireland together. So we're going to have those moving into Northern Ireland with no tariffs. This is where qualifying status of the businesses comes in again, because someone's got to be trusted that they're not telling a fib, that the goods are going to stay in Northern Ireland in order to get out of paying the taxes. The second set of goods that we could have are goods that we know are going to end up in the Republic of Ireland across the land border. Now, those ones are going to be subject to the EU tariff schedule. Watch out for that, because that's probably a different tariff code to the UK tariff code, because we're going to have a new UK general tariff, and it will be a different rate of duty to that is shown on the UK general tariff. So this is going to be the EU's central external tariff, the one we use today in effect, and that one will dictate how much duty is to be charged for the import of the goods into, at the time of import, into Northern Ireland, but knowing they are going through to the Republic of Ireland afterwards. So we have to have a way of segregating those goods for that.
Susan,
Then we have, yes.
Can we just ask a question, please? We have a question here that says, if we offer DDP terms to our customers in Republic of Ireland, do we need a registered legal entity in Ireland to do this?
I think the answer is going to be yes. Because how else can you be the importer as well? You are registered in the UK customs territory, but Northern Ireland is under these special protocols. And I think it's going to mean that for everyone's sanity, you are going to have to be registered as an importer, or have someone you can use to be the importer in Northern Ireland in order to fulfill the qualifying status in Northern Ireland and to manage the import procedure in Northern Ireland. This is why DDP is always dangerous, because of course you always have to be registered in the country of import. It's not just a Northern Ireland thing.
Hi Susan, just so that I followed that correctly then, we would then in that instance expect that the declaration was actually done in Northern Ireland, but the importer of record would go down as the company registered in the Republic of Ireland.
No, the importer of record would be in Northern Ireland.
So for the movement across from the Northern Ireland to the registered company in the Republic of Ireland, you would have to do another declaration?
There is no border. This is the point of the land boundary.
So why would you then have to be registered in the Republic of Ireland if you were making the declaration in Northern Ireland in the name of the company registered in Northern Ireland?
Sorry, you need to be registered in Northern Ireland. Perhaps I muddled that up or wasn't clear. It's not going to have to be registered as an importer in the Republic of Ireland.
Right, okay, thank you.
So you need to be registered in Northern Ireland, because once the goods have been imported to Northern Ireland in this example, then they will move across the land boundary as if it were not there. They will simply drive and go. All import formalities to Europe, which is essentially what we're talking about here, will be done at the Northern Irish border at the point of import goods arrival at Northern Ireland. So this is the change that we're having to think about. They're being done in a way by proxy on the Northern Ireland border, but you are importing them to Europe at the border of Northern Ireland, in essence, if you want to think of it that way. So it is quite complicated. You have to get your thoughts sorted as to the type of goods and what you're doing with them before you embark on the journey at all. So, and those tariffs will be EU tariffs, as we said. Then we come to the other sort of goods that are in GB, but are not customs cleared. These could be goods that came into GB, into customs warehousing or inward processing or some such procedure. So they paid no duties and taxes into GB. But now you want to move them along and you're thinking of, well, maybe I'll put them in Northern Ireland, or maybe I'll put them in the Republic of Ireland. What next? Well, these goods are not what we would call in free circulation. Now, if you're moving them to Northern Ireland for further processing or further customs warehousing, then these are the ones that are going to have an export and an import declaration because they're special. Otherwise, we don't know they've moved under the special procedures, and we need to know that to manage their movement. But there won't be any duties and taxes to pay if they're still going into that kind of processing in Northern Ireland. However, if they are going to Northern Ireland to stay there, so they're being released from customs warehousing in GB, let's say, but they're now being moved out to their final destination in Northern Ireland, where they'll be used, perhaps a shop, something like that, then they've got to be imported to the UK. And the place of import to the UK will become the Northern Irish border. So at that point, an import entry will need to be done for those special goods, but they will be subject to the UK tariff. So the UK tariff number and the UK general global tariff. And they will have to pay UK tariff amounts according to our rules, not the EU. So you can see we've got three opportunities in Northern Ireland: import with no duty, import with EU duty, and import with UK duty. So we've got to be really, really sorted out and clear before we ever put the goods on that ferry, or on that plane. We've got to know what's going on and act accordingly from the very get-go. There's no fuzziness about what's going on here. Now, there is an option being offered, we don't have the full detail yet, that if you paid the EU tariffs, which are taken to be higher, and that's because the goods were at substantial risk or known to be going to the Republic of Ireland from Northern Ireland, then they didn't go. They ended up staying in Northern Ireland. You can, as the importer, do a reclaim on the difference between the EU tariffs and the UK global tariff. Hopefully this is reasonably clear, but you can see that there's different sets of processes according to the type of goods that you're moving. And by that, I don't mean particularly foodstuff versus industrial. I mean the customs status of the goods that you're moving and where you intend them to end up. You've got to be crystal clear on that. Now, the government has said they're going to use the latest technology they can to facilitate these border crossings and to facilitate the customs entry. And at the moment, they're intending to use in Northern Ireland the customs system of CDS, not Chief. And that's because Chief is being phased out, but it won't be phased out for quite some time yet. But also because Chief is not able to cope in its current form with two different sets of duty and two different sets of tariff codes. It was never designed for such a situation. CDS, on the other hand, is flexible enough to do so. So it's being said that all importers into Northern Ireland who need to do a customs entry will be having to do so through CDS. So that means that you've got to get your systems ready to work with CDS by the 1st of January, because all of this comes in as a hard stop 1st of January. There is no staged process and no lead-in being offered. This is it from the first minute of January. We've got to be able to do this. Now, another complication to this, if you want, it's an opportunity as well, but it's still a complication, is that the port operators, those running the ports in Northern Ireland and airports, can choose to run one of two systems. And one of those is called the pre-lodgement model. This is lodgement of a customs entry. And the other is called temporary storage, which is a sort of special procedure for ports and airports. Now, what this means, the pre-lodgement model means you've done your customs entry before the ferry docks in Northern Ireland. It's already on the system, already done, just waiting for the arrived notice to clear through. That's what pre-lodgement means, and ports can opt to do that, or they can opt to have an area that they put aside under the temporary storage model, which has to be authorised and secure and all the rest of that stuff, where goods can come off the ferry or the plane, go into that area and stay there for up to 90 days while somebody somewhere sorts out the import entry, if that is needed. You wouldn't put them in temporary storage if they were getting unfettered access. But you see what I mean? It could go into temporary storage and we'll sort it out later. So the ports can opt for this model. At the moment, nobody's opted for anything. So we don't quite know which way any of them are going to go. But it's probably the pre-lodgement model will be the most prevalent, but we're not sure yet. We don't really know for certain. Now, if you go with the pre-lodgement model as a port operator, what that means for all your shippers is that, as we said, there's got to be the customs entry pre-lodged with customs, and it will be HMRC doing the customs in Northern Ireland, that they must have the customs entry on the system before the goods arrive. So all of this has got to somehow be notified so we know before the goods arrive, because we don't want to pile up on, in Belfast with all these trucks and things just waiting to be released because nobody knows whether they pre-lodged or they haven't. This won't do. So what we've got instead of that is a system called GVMS. You might have heard it, the Goods Vehicle Movement System. It's a new system, GVMS. Now, there's an awful lot being said about this in the press and elsewhere at the moment, and I'd suggest a little calm is taken. There's been some inflammatory statements in the press. Easy does it, it's not that bad. But the whole point of GVMS is it's a kind of web application. And the idea is here that when a truck, let's say, leaves GB, before he loads, the forwarder or the trader, wherever he is, will hand over, as usual, a whole sheet of documents, those that are needed for the movement. They will also have done the customs entry and have got a reference for that customs entry, at least an MRN. And this will all have to be entered into the GVMS system, the reference numbers. GVMS is like an envelope where you stick all the reference numbers in and write on the outside of the envelope the vehicle registration number, which is what it's tied to. So then when that truck approaches the port, he's got the all clear on GVMS to go because he's registered all the right reference numbers that are needed for those goods. And so he gets a green light, you may board the ferry. So on the ferry he goes, and whilst he's on the ferry, HMRC will take all the information they've received from that customs entry and they will give clearance. And this will be in some way advised to the driver, perhaps by pinging the mobile phone with a message, something like that. Simple as that is the idea, or pinging his head office, who will ping him in some way, whichever's decided. And then he will know, or she will know, that when they roll off, they can go through, if you like, the green light channel, because everything's already done. Off they go into Northern Ireland on their way, or they've got to go into the red light channel, which is where they will have to have checks and paperwork sorted out and things like that, because they're not cleared to go. So this will be done whilst they are on the ferry. This is the idea with GVMS. So that's the point of GVMS. It's an envelope with all the codes in it. And it's going to automate the transit function as well. So if the goods are moving under transit, it is GVMS who will be the office of departure within the system. It'll be automated. And then they'll proceed under the normal transit protocols that we do for transit. So that's very good. The trader, of course, or the freight agent has got to be very clear with the haulier what exactly they've done, which type of goods, as we've already described, there could be three sorts, what they've done, what the purpose is, where it's going, so it can all be entered properly and the driver knows what he or she is doing, which is quite a task perhaps for some, especially if you're using drivers who are not English speaking. This may be a little harder to explain, but hopefully we can get some translation going and make that happen. So that's what the pre-lodgement model requires. Temporary storage, as I say, you slip into temporary storage and there's up to 90 days for those doing the import to sort their lives out, get the necessary entries and paperwork done, and then the goods can move. But they will stay at the port until they have moved. Now, the last element of this jigsaw puzzle are things called agri-food movements of goods, where there are definitely checks to be done. And this is because of the European tie-up. Even if the goods are not moving outside of Northern Ireland, there are still statutory checks to move them into Ireland today. So we have to continue this. They are only going to be done at particular ports and airports. So you have to route your cargo through either Belfast Port or International Airport, or Belfast City Airport, or Warren Point Port. That's quite hard to say. Warren Point Port. So they have to go through those ports if it's agri-food that needs checks and particular certification. They're expanding the facilities, the BIPs as they've been called, Border Inspection Posts, to take the extra traffic. So they can do more tests quickly through those existing BIPs. So there's a bit of infrastructure to be built there and more people to be brought on board. The government's dealing with that and paying for the infrastructure and sorting it all out. So we're promised they'll be ready for the 1st of January. But you can't go to any other port if you've got agri-food. The other thing is particular industrial goods might need some regulatory checks at the border, but these are not going to be done at the border. These are going to be allowed to flow through into Northern Ireland, and these checks of industrial goods, where necessary, will be done on a risk assessment basis at the business premises of the importer or wherever they end up, the delivery point, or actually in the marketplace. So they won't stop the flow of goods at the port. And at that point, I'll open for questions.
If anybody would like to ask a question, we don't have much time left, but please feel free to ask it. I'm going to unmute everybody now, so you've got the opportunity. Hopefully that's working. So if anybody would like to ask a question, please feel free.
Hi, this is Claire.
Hello, Claire.
Hello. I've got two questions, please. The first is, you said that we won't be doing an export entry for goods leaving from GB to Northern Ireland, but will we need to do one for GB to Southern Ireland?
Yes.
Yeah.
Because that's simply moving from the United Kingdom to Europe. So
Yes.
that comes under
none
none of the rules we've spoken about here.
No, I mean if the goods transit Northern Ireland.
There will be an entry into Northern Ireland to release them into Southern Ireland.
Yeah,
So
but will there be an export entry in GB?
Not unless the goods are of the sort that I said are under customs warehousing or some other special procedure or transit.
Right. Okay. So I'm just wondering how you get proof of export then if you're sending goods to Southern Ireland via Northern Ireland.
Well, you would have your import entry, which will be done on EU customs duties. So that would be quite a proof.
But you won't have an export entry?
No.
No. Okay. And just another quick question. So if you're a UK business selling to Northern Ireland, would you just still continue to charge VAT like you do today?
If you're selling directly to Northern Ireland and it's staying in Northern Ireland, yes. It becomes much more complicated otherwise. I mean, because you would be getting access with no tariffs, you see, so no VAT on import, if you like. So you would charge VAT on your invoice and they'd have to pay it. So that's why that works, because you will charge them VAT, but it won't be done as import VAT.
Right. Okay.
But of course, if it's one of the other sorts of movements where you do pay duty and VAT, you shouldn't be charging them VAT.
Yeah. Sure. Okay.
Do we have any other questions from anybody? No, no more questions.
Hi there, it's Rob here. Just one quick question. It may have been covered already, I think, in another question. I just wanted you to clarify the point about DDP shipments and whether that importer record must be registered in Northern Ireland.
They're going to have to be, yes. Because you're not going to be able to reach out and do this. You need an importer of record in Northern Ireland. And registration, yes, we can be registered in the UK and therefore do imports into Scotland and imports into Wales. But Northern Ireland is going to be in a particularly difficult position here because it's got one foot in Europe and one in UK. So I think if you're going to have to actually do and commit to an import entry into Northern Ireland, you're going to have to be a Northern Irish business. At least that's the position at the moment.
Okay, and would that be a GB EORI registration if a new legal entity was created?
I'm not sure if they're giving out Northern Ireland EORIs or not.
Okay.
Not yet clarified.
Okay, thank you.
All right, well, thank you, everybody. We will